Today I'm talking about two stocks which reported earnings recently. One stock is a stock that I sold at $40, like around $39, and I have made a video about it because I thought it was a bit overvalued. And since then, it reached new heights, I think up to 45, close to 43, 45. I sold it around here, right here. And then it reached 43, 44, and then its earnings came out. Twitter is still not a very profitable company, or it is profitable, as you can see. It's 19.7, but its earnings were really bad, and not just that, but it's because they couldn't earn all their ad revenue, and they weren't able to take all their ad revenue, and because of a bug that impacted its revenue. And we'll just look at it here. So, so profit from third quarter was 37 million, a sharp decline from last year when Twitter was helped by a large tax benefit. Revenue rose 9% from a year earlier. Twitter said revenue was hit by bugs, which made it harder to deliver targeted advertising. In quarter three, we discovered and took steps to remediate bugs that primarily affected our legacy mobile application promotion product, impacting our ability to target ads and share data with measurement and ad partners. So I don't see this as a huge problem in the long term, because it can be fixed just with the right amount of the right team and the right facilities, which obviously Twitter must have because it's such a big company. So I did say it's overvalued, but I am interested in it. If it falls like maybe a bit more, then I'll buy it again. But right now, there are other stocks that I could invest in. Because market, it's a relatively medium stock with 23 billion. Another reason is it has a lot of competition with Snapchat and Facebook. So if you look at Snapchat, so its market cap is 18.65 billion. So they're neck and neck. So they're neck and neck. And another competition for Snapchat is Facebook, obviously, and that's a way ahead. It's at 465 billion, so it's like tens of 100 times bigger. Another stock that has fallen is a huge growth stock, which is Amazon. Amazon's market cap is 880 billion, making it the third biggest company behind Apple and Microsoft. So it fell because it missed on earnings and revenue. Shares fell nearly 7%. For the quarter, Amazon raked in. Okay, so it beat revenue, but it missed on profits versus 463, and that's because to ship products faster took more money, so it did affect the profits of the stock. And for investors, which came at $9 billion, analysts have predicted $9.2 billion, and this is the first quarter in 2 years that Amazon has missed on earnings. So it's a big distress sign for investors. But if you are an investor of Amazon, I don't think you should be too worried, as it's just one earnings report. If it consistently happens, then I would say worry. But this is the third biggest company. It's become big in e-commerce. It's starting to become really big in cloud. It's the biggest in cloud, and that could be a completely new business for it. So these are just two other earnings that have been reported. The next earnings we will be looking at is Apple and Facebook, which are reporting earnings on the 30th. And my next video will be my stock watch list in case a stock drops or gains if I sell. So it really depends, and you will be seeing that either today or tomorrow. So leave a like and subscribe. Comment down below what videos you would like to see, and thank you.